Imagine a world where fashion reigns supreme, runways ablaze with couture, storefronts gleaming with designer logos, and shoppers racing to snag the latest Louis Vuitton drop. For 2 decades, the global luxury market was a dazzling juggernaut, nearly tripling in value as the planet fell under the spell of high-end allure. From a $130 billion industry in 2000 to $366 billion by 2023 per Bain & Company, it was a boom that seemed invincible, especially in China, where the appetite for extravagance rewrote the rules. But zoom into Beijing today and you'll find a haunting relic, an abandoned plot once slated to be the city's crown jewel of European high fashion. Now it's a stark symbol of a fading dream. China, the unstoppable engine of luxury growth, is facing a reckoning it's never seen before, a bust that's shaking the glitzy empire to its core. What happened? Let's unravel this wild tale. Picture China in the early 2000s, a nation on the rise, its middle class swelling, its cities gleaming with new wealth. Luxury brands like Gucci, Prada, and Rolex didn't just notice, they pounced. By 2023, China powered 38% of global luxury sales, a staggering $140 billion, outshining North America's 25% and Western Europe's 29%, according to McKinsey's luxury report. Shanghai's malls buzzed, Beijing's boutiques thrived, and sales ballooned into the tens of billions. It wasn't just the old money elite driving this. Over half of China's wealthiest shoppers were Gen Z and millennials born after 1990, a youthful wave craving status and style. Then came the game changer, the pandemic. Before COVID hit in 2019, Chinese buyers scooped up 2/3 of their luxury goods abroad, $90 billion annually in hotspots like Paris, Milan, and London per Euromonitor. When borders snapped shut in 2020, that cash boomeranged home. Luxury spending in China surged 48% from 2020 to 2023, turning the mainland into a goldmine. Brands like LVMH leaned in hard, opening flagship stores and betting big on a captive audience. It was a frenzy. China wasn't just a market, it was the market, exposing luxury giants to an economy they'd once circled from afar. But no party lasts forever. By 2024, the glitter started peeling. Roughly 50 million Chinese shoppers, equivalent to Spain's entire population, either opted out or got priced out of luxury over the past 2 years, analysts estimate. European titans took a brutal hit. LVMH, Kering, Gucci's parent, Moncler, and Burberry saw a combined $200 billion vanish from their market value in 2024, per Bloomberg. LVMH, the world's luxury kingpin, suffered a 3% sales dip, its worst annual flop since the 2008 financial crisis, dragging its stock down 15%. Those unfinished Beijing stores, they're now monuments to a dream gone sour. So what flipped this dazzling tale upside down? It starts with China's economic stumble. First, the real estate crash hit like an earthquake. China's property market, peaking at a $50 trillion valuation in 2021, was the middle class's golden ticket. 70% of household wealth tied to homes, per Goldman Sachs. When the bubble burst, $7 trillion evaporated by 2024, leaving families reeling. A $2,000 handbag? Suddenly it's a luxury too far when your nest egg's crumbling. Then there's the youth crisis. Unemployment for China's under 25 crowd spiked to 21% in mid-2024, triple the national 6% rate, per official figures, though whispers say it's worse since Beijing tweaked the stats. These aspirational pros, the post-90s crew driving over half of luxury sales, were the lifeblood of growth. Now they're jobless or jittery, swapping Birkin bags for belt tightening. Let's zoom in on Julin Chen, a 35-year-old who rode this wave and saw it break. A decade ago, she was a JP Morgan hotshot, but her real game was on WeChat, where she built a massive following blogging about Chanel drops and Fendi fits. Brands begged me to crack China. Chinese consumers bought everything, she laughs. By 2019, luxury e-commerce in China was exploding, hitting $40 billion with a 30% yearly growth rate per Statista. Julin quit banking to cash in, launching a business fueled by live-stream sales. I was all in, e-commerce ops, hawking designer gear live, she says. But then she noticed a shift. People got tired of the hype. Too much stuff, not enough happiness, she recalls. Her followers messaged her. We're chasing mental health now, self-discovery, not just elite jobs and flashy labels. In 2023, wellness spending in China jumped 12%, outpacing luxury's growth per Deloitte. Julin pivoted, ditching handbags for wellness workshops, retreats, even meditation events. It's less about owning, more about experiencing, she says. Her story's a microcosm of a seismic cultural turn. Julin's fans aren't alone. Young Chinese are flipping the script. Travel and wellness spending soared 15% in 2024 per Deloitte, while luxury slumped. Brands like Lululemon and Arc'teryx rode the wave. Their Tmall sales skyrocketed 25% last year, fueled by athleisure's laid-back cool. Then there's the dupe revolution, high-quality knockoffs flooding platforms like Douyin and Taobao. Dupes mimic 1,500 originals for $50, snagging 20% of China's accessory market by 2024, per Jing Daily. Why flash a logo when you can go low-key and save? Shoppers muse. Spot the difference. Original, dupe, original. It's a game luxury's losing fast. Here's the wild card: politics. President Xi Jinping's Common Prosperity Vision, kicked off in 2021 to shrink a $15 trillion wealth gap by 2035 per Xinhua, has the rich on edge. Billionaires like Jack Ma vanished from sight after bucking Beijing, a stark warning to flaunters. Showing off a Rolex now feels like painting a target on your back. Luxury purchases by China's top 5% dropped 10% in 2024 per Bain as wealth goes undercover. Brands pivoted. LVMH and Kering now woo VIPs with private fashion shows, art exhibits, even BTS concerts, chasing the 1% who still splurge. These VIPs, China's top 2%, drove 40% of luxury sales last year, a lifeline in lean times. Luxury's scrambling to adapt. E-commerce live streams, once a $20 billion luxury channel in 2022, lost steam as shoppers soured on excess, per Alibaba data. Instead, brands doubled down on exclusivity. Think invitation-only galas and bespoke experiences. Meanwhile, the global market's contracting. 2025 sales forecasts predict a flat $130 billion in China, down 7% from 2023's peak per McKinsey. Those unfinished flagships, silent sentinels of a quieter era. LVMH is looking elsewhere. India's luxury market is growing 12% yearly, hitting $10 billion, while Southeast Asia and the Middle East beckon with untapped promise. Kering's testing pop-up stores in Mumbai, betting on Bollywood buzz, per Vogue Business. So why did China's luxury empire falter? It soared on a wave of wealth, youth, and wanderlust, then crashed against economic quakes, cultural shifts, and Xi's leveling gaze. The global luxury market's still worth $350 billion in 2025. But China's boom days are a memory. Julin's pivot from Prada to peace mirrors a generation rethinking value. Luxury's not dead, It's evolving, chasing VIPs and new horizons. Will it reclaim its Chinese throne? Maybe, if it learns to dazzle smarter. For now, those Beijing ruins whisper a truth. Even the shiniest empires can dim. What's next for luxury? That's the runway question. If you enjoyed this video, don't forget to like it, subscribe for more fascinating stories, and share your thoughts in the comments below. You can also support us on Patreon, link below.